Sold at 560.
785 the first, 785 the second, be sure, 785 the third, final time, sold. The third and final time at £910,000, sold. Hello everybody and welcome to the current edition of the Allsop Prop Chat, the podcast that aims to bring a few news and views of the real live front of the market and our view is the commercial auction market. We're reviewing 7 months of the year to date up to July 21. My name is George Walker. I'm from Allsop's auctioneer, and I've got with me today my fellow auctioneer, Will Clough.
Hi George, fresh from a terrible haircut this afternoon, but we'll muddle through.
Terrible haircut and no cricket. And Ben Hodge last joined us from the beach in Cornwall with his dog.
Thanks, George. Hi. Joining you from London today.
London today. And also today, a special guest actually, first time on a podcast, is Charlotte. Straight back from Mallorca.
I am indeed, yeah.
Good time?
It was lovely.
Brilliant. And how many flats have you shortlisted? I bet you're looking to buy one.
Yeah, I am. Quite a few.
You really?
Yeah.
Excellent. Good. Looks like a good time. So we're going to cover today, as I said, the last seven months of the auction market, and we put the summer review together and we're releasing this at the same time as that's gone live. So everything is illustrated in text and glorious Technicolor for you. The basic subject areas we're going to discuss is the kind of process and how we've brought things up to date. I look at the buyers survey that Ben's conducted in the last 7 months, the impact of inflation on the market. Got to introduce shopping centres there, of course. The other area is the sort of where the residential and commercial markets have joined, and we'll have a look at the mixed use and look at some of the implications, how it's impacted single let commercial property in high value areas, and its impact on net initial yield. Sounding a bit technical, but we'll explain it, don't worry. The last thing we'll do is look ahead into the future, get the crystal ball out and see where we think the impact of inflation and other things are going to take this year. Well, you'll have seen the stats. We sold just over 450 lots, raised 323 million. And to date, that's 100 lots over £1 million. We've done £200 million in large lots this year. A lot of that has been due to the systems we have. And we thank you all for sticking with it. If you bought from us, you'll know that we're registering buyers and bidders and we're taking deposits. Everyone's really got used to that and it's great. We couldn't have done it without a team. And I think we want to illustrate it by one lot in the last auction where the auction starts at 11 o'clock and at 11:15 I had a lovely bloke I hadn't spoken to before. Is that Mr. Walker? Yes. Right, I want to buy your lot in Knaresborough. Okay. Do you realise the auction started? Yes. Okay, have you registered? Nope. Okay, fine. So there was only one person I could call in that situation, and Charlotte, I put him straight through to you. And I think actually you got somewhere.
I did. Great accent, by the way.
Yeah, it's weak, isn't it?
Yeah, it was actually straightforward. You put him through to me. I sent across the link, talked him through it, and within 5 minutes, he was registered and good to go.
Really? So actually, the public was probably there, but he hadn't quite found the right
Exactly.
link. Yeah. So photo ID and everything else came through.
Yeah.
Brilliant. Okay. Did you know until this point he actually bought the building?
I didn't actually.
You did, £2.8 million.
Oh my God.
And everything went through and you sent the deposit later. It's just one little example, but it's a process that works incredibly well. You can do everything from your phone and your desktop. And as you said, we sold so many lots. It's been very, very successful. So moving straight on from that then into the first bit of the review, which is the buyer's survey, Ben. So bring us up to date with that.
Yep, thanks, George. Buyer's survey, just bit of a reminder. Obviously, buyers, for every lot we sell, we need a buyer. So it's quite important that we ask them for their views. The main themes that have come out from our buyers this year, to date, that is cash once again, and we say this every year, but more so than ever this year, cash is king. 78% of our buyers have relied on cash reserves to complete. That's up by about 10% on last year. And in terms of demand remains strong looking forwards. We've actually got 96% of our buyers that said they actually would like to buy again.
I think they're just being nice to you, Ben. They would say that. What about the demands?
We are asking them just after they've bought something.
Where are they looking, Ben? What are the sectors their buyers are after?
Well, I've got to be careful because, again, this is something we've asked them after they've purchased something. Our catalogue's been very retail heavy this year. Yeah. So 41% of the buyers have said they'd like to buy more retail, which might sound like a shock to most people given the headlines, but 41% retail and 32% industrial. We've got convenience stores, offices, and alternatives also being sought after, but the majority are looking at retail and industrial assets.
And that's really no surprise in the market. Everyone's chasing industrial. That's where
Everyone's chasing
rental growth's
industrial.
going to be.
Precisely.
And retail yields got so high.
And also, I think with retail, they can see opportunity. So they really want to buy in probably when they perceive to be the bottom.
And so where are we? Where are the buyers coming from? Have we got any overseas back?
Yeah, we're starting to see overseas come back. Last year, we didn't have too many overseas buyers, but this year we're running at about 9-10% overseas buyers.
Do you think the lack of travel or prohibition on travel has impacted that or not?
Yeah,
really.
I think last year, certainly the prohibition on travel or the difficulty in travelling, but as things are opening up, especially...
And Charlotte here can register people from anywhere around the world.
And the digitalisation, Charlotte's allowing
Exactly.
people to register. We have seen overseas buyers return.
So, but Will, you sold the Richmond East Sheen piece.
Richmond, yeah. Was that the July auction? I think I'm losing
July
track of
auction,
time.
yes, it
July.
was.
And
The
our
Sydney
buyer
bits.
from that was based in Sydney. Someone we've sold for a few years ago, and operates a UK company, but he's been in Sydney for a while. So he was burning the midnight oil as we were negotiating away, and with someone on the ground in the UK to do a bit of running around.
And what about the local? We managed to pick the local people up?
Yeah, so I was going to say it's quite interesting because we've got these international buyers, we've got the national buyers, which make up the majority of our buyers. These are people that buy anywhere in the British Isles, but they're based in the British Isles. But then we're also getting your local buyer, and by that I mean somebody who's within 5 miles of the asset they're purchasing. Now, interestingly, all of those that we surveyed, the local buyers that fall within this remit, all of them were actually new entrants to the market, which shows that actually the catalogue was able to pick out your special purchasers, your adjoining owners, for example, or your buyer who tends to buy in their, on their local high street.
So
They
the
like it, they
old-fashioned
know
golf club bragging rights. Did you know?
Exactly.
I just bought
it.
that.
So we're picking up the local buyer, the national and international buyer, as the survey picks
And
up.
probably the more deal-driven people will drive a long way.
Yes, deal driven. I mean, that's another thing we picked up on. We did ask people what's driving their investment choices, and half the people we surveyed and asked said that actually that they will be deal driven, specifically deal
And
driven.
I think there's probably no focus on what that deal is, and we'll probably cover it off going forwards.
Yeah.
But everyone's deal is something different, isn't it?
And that's the duo, really. You never quite know. Good, Ben. Well, that's really fun. I mean, it's very positive, and thanks everyone for the response. It's great to get such positive feedback, and people clearly want more, which is great. So, Will, the inflation word sort of began to rumble at the beginning of the year. How's that impacting the sort of pricing we're getting and where buyers are looking?
I think we've probably mentioned inflation in every podcast we've done so far. And generally, it's been focused around fixed uplift or indexation. And with inflation in the headlines more than ever and on the rise, people are looking to hedge themselves against inflation going forwards. And that would be covered off by CPIs, RPIs, fixed uplifts, as I said. And for the private investors, it's the golden ticket, really.
It's also no hassle, isn't it? If you've got an RPI review, not only do you get that inflation, but also you haven't got a hassle with the revenue.
It's a quick calculation. There's no discussion.
And 3 months later, it's built in.
Exactly. And that's covered off in convenience stores. Some examples in the review of nurseries.
Convenience stores is standard. The one that nursery was quite interesting. Where was that? Bolton.
That was Bolton, Busy Bees. It was quite long income. It was not an attractive property, but here it's largely irrelevant. That was let till 2039 with a really high cap on that RPI and rent at a low rate per foot for nurseries.
The high cap, what do you mean by that? It's normally what?
It's usually
4%
1 and
maximum.
4, 1 and 3,
Yeah.
and this I think was at 7.5%. So that really does cover you. If inflation does start running,
Yeah.
you reap the benefit of that.
And every 5 years, it's a chance.
Exactly, and a lot of these will fall into the long income sector, what we would define as long income plus 10 years.
So, I mean, who's the likely buyer of this? It sounds to me like it could be a pension play. It's long income, it's index linked. This is
Exactly, tuck it away. And if it does fall into the long income section, don't worry about it. It's why we used to talk about people buying retail assets quarterly in advance, 4 checks a year, FRI, don't worry about it.
It's back to the old-fashioned financial
Yeah.
hedge, really. Yeah. And rate per foot is interesting. We're going to talk about that a bit today. Very hard to know what a nursery would be worth. I guess it's a sort of a regional
And there'll always be a swing between what are purpose-built, what aren't. Is there underlying value there? Can future conversion, I mean, in this one in Bolton, for example, which you'll see in the review, the future for existing alternative use of that current building is probably pretty limited.
Yeah, but again, that mechanic of the RPI review saves the hassle.
Yeah, and when we get to that, we got just a little bit above 5.5%.
Brilliant. And that was guided, I think, at 7.5%. So
yeah, and wind back to last year, we had the package of roadside properties. Quick Fit was the ultimate tenant there. All these sort of household covenants. Busy Bees was in the Sunday Times recently as one of the fastest expanding overseas companies.
It's something people really understand. A lot of professionals who'll be buying from us would probably put children into nursery.
Charlotte, are your children in busy bees?
They are. My youngest is. He's not in a Busy Bees, no. But he's in a chain of a nursery, yeah.
Really? Okay.
Same sort of thing.
It's very real, isn't it? It's very live.
Yeah.
Good. We must keep going because there's a lot to cover in this time. Can't help but talk about shopping centres. I won't talk about it too much, but at the beginning of the year did see the closure of the West Orchard Centre, which had been on the market for a couple of years, and we got that away.
Closure of the sale. Closure of the centre.
I hope not the centre.
Well, it was, wasn't it? You joke that it was covered in yellow and black tape. It was closed, but we got it. The sale was brought to a head, I should have said, in a February auction at 4.85 million. I've called the bottom of the market in that sector. It's been well publicised. That really did kick off a lot of sales. We haven't had as many. We've had about 5 or 6. £15 million worth of sales so far this year in shopping centres, where people spotted the bottom in public, and buyers who wouldn't necessarily look at shopping centres thought, well, the yield, it may be high risk, it may be complicated, but there's a lot of yield compared to your flats in the south of England, which is 4%.
And we discussed that. If you can slash the rents in half and make it more affordable, you're still getting double-digit returns.
And that's the key.
And it probably led to the huge demand for Kidderminster that we had
later. Yeah, huge demand for Kidderminster, the Swan Centre, which also is outlined in the review.
That was way ahead of the guide.
Yeah, it was way ahead. It's actually quite nice to see that sector freeing up. The values are pretty grim compared to 10 years ago, but it is a much more free up sector. And I spoke to a mate at Savills the other day and saying that they've done so many more deals this year. The whole show was in the market. I won't say it's just down to us, but we've been part of that.
And at the lower end, opening it up to new buyers that would previously have been priced out or perceived not to be.
So the Dumfries one went to a new buyer of shopping centres, everything else.
But actually, the buyers of all of these shopping centres that we've sold so far this year, they're very entrepreneurial people, and they've got relationships with tenants. So they do believe that they'll be able to fill the voids that they've got with sensible deals. And that's where the margin is between making money on these things and treading water, really, with the service charges and running costs.
Yeah, so getting ahead of the game.
Yeah. So we discussed shopping centres. Now let's have a look at the residential sector, which has had, it's been a market of very positive headlines over the last year, with incentives such as stamp duty holidays, for buyers, but we've seen a lot of these mixed use assets with residential potential or upper parts in the auction room. And actually, when we looked at it, we analysed it. We've seen that half of our top 30 most popular assets sold at auction had underutilised upper parts.
And for those listening, Hodgie, perhaps that they don't understand what you mean by that, or it's not quite clear. How would you best describe underutilised?
Probably best describe it by suggesting undervalued upper parts. This is where an alternative use might be of greater value than the current use in play, or it could be, for example, a shop where they've only rented the ground floor and the upper parts are self-contained.
But most of these are, looking at the Boots of Santander portfolios which you sold, most of them are actually on one lease, aren't they?
They are, yeah.
So actually the buyers are digging out or identifying value that is not immediately apparent, but once you get under the skin of it, that they are paying a bit more for because they think they can exploit it in the medium term.
And I would say arguably where rents have been rebased, which is a positive thing, as the upper floors are traditionally a function, their rent is a function of what the ground floor zone A rent might be. As the rents are rebased, arguably on existing use, the upstairs has diminished in value, while its future alternative use has probably gone the other way.
It's probably in those high value areas where the residential particularly value is a lot higher.
And I think
still people don't want second floor storage.
Exactly, and we can probably lead on from that by picking out one such example from July, which was one of the Boots portfolio, a new 5-year lease or a re-geared 5-year lease. This was in Southgate to Boots. We guided it at 4.5%, which I'd say is quite a sharp yield to be guiding in the auction market. It had 1,750 square feet of uppers within that lease. After some competition on the day, came in at 2.9%.
Which has got to be some sort of year record, isn't it?
It's got to be a record. It is a record yield for 5-year income in our world.
But I mean, does that raise the question of how valuable that measurement yield is actually as a tool for valuation or pricing? Is that right?
Well, what is a yield? Reflection of risk, but it's a unit of comparison, a metric for comparison, isn't it? Between not just property as an asset class, but everything else. It is perhaps becoming less valuable than it ever has been. When properties become over-rented, it becomes less valuable. Under-rented becomes less valuable. As we're talking about these underutilised upper parts, purely using the yield, a return on your investment or your purchase price, as the measure there of value, becomes far less important. Perhaps there are other avenues to explore. Rate per square foot.
I mean, it has to be the rate per square. So, an example of that's obviously relevant where there are turnover rents. We're seeing a lot more turnover rents in our market,
as we saw in Guildford from earlier in the year,
which we talked about March, was it?
Maybe a bit after that, but that was the Jack Wills property.
That's right.
With a turnover rent, with no base rent, your yield changes month to month.
Yeah,
and
that came out just under £400 a foot.
Yeah.
So, that comes back to that's the measure.
And we're starting to see more and more of these turnover rents in our market.
You got one in this market, this auction?
We have in Stamford, New Look.
Okay.
But we are seeing these turnover rents becoming more common on the high street.
And I think it's probably a question to you, the listener, is where do you see the turnover rents going in the future? Will they become more prevalent? How are you pricing it? How are you setting your caps and your limits at auction? Is it on a yield basis? Are you pricing off pounds per square foot? Is it a combination thereof?
And I'd be quite interested to hear examples, actually. I'm going to give the email address.
It's podcasts@allsop.co.uk. It's a topic that will continue to evolve. And so it'd be good to hear what you think about it.
And the thing about turnover rents is they're no longer a surprise in every auction in Scotland, and I'm sure every portfolio has them too.
Okay, George, well, if we look ahead, where do you see us? Where do you see the auction market? Where do you see us heading into these final parts of the year?
I think it's been a really solid, very good first 7 months. I think that's going to continue, Ben. I mean, it's driven by, the returns we're getting. I think you showed me someone who had £3 million on deposit. What was he getting every month?
He got £27 in the month.
For £3 million sitting there.
£3 million in his bank, yeah.
It's 3 million sterling.
It's got to be another way.
That's 10 cups of coffee a month for the benefit of £3 million. Wow, okay. I mean, I suppose it's better than Germany, which is negative interest rates. But I mean, that has got to be a massive driver of the sort of high yielding market in which we work going forward. But that's driving our market. Inflation is the big unknown. It's really quite high historically. That's obviously very good in one respect, but if it keeps going up, that's going to be a challenge in interest rates. But I think we all agree. I mean, the country is opening up. I mean, my car parks are busy. Are the tubes busy, guys?
Yeah, tubes are getting a lot busier.
My little scooter ride in is certainly getting busier, particularly this week.
Yeah. Well, thanks. I think that brings it all to a close. What do you think, Cloughy? Are we done?
I would say a whistle-stop tour of the 7 months, January to July. And if everyone hasn't had a chance to download the document, it's online. And as ever, do give us a call if you've got any queries.
It was a bit quick, wasn't it? Charlotte, how was your first podcast?
It was good. Thank you very much for having me.
Well, thank
you. Have you learned something?
Yeah.
That's what we like to hear. And don't forget, if you have got any examples or queries over how you rate turnover rents and rates per square foot for the more difficult retail buildings, just ping an email to us on podcasts@allsop.co.uk or simply go to the website and ping a note to one of us, Will Clough, Ben Hodge or George Walker. Thanks for your time.